Futures TV show, sponsored by CME Group and TradeStation.
Hey everybody, welcome to Futures TV show. In this episode, I'll be speaking with Chris Hehmeyer, as well as Greg Sroden, Dr. Jessica Hehmeyer, and of course, Julia Mula, the creator of Redsky Software. Welcome to the world of futures. Chris, thank you for joining me, man.
Thank you so much for having me.
Appreciate you coming here. So Chris, you already know I think you're a legend. Every time I see you, I tell you this. And recently, you just got inducted into the Futures Industry Association Hall of Fame. So congratulations, my friend.
Thank you very much. That's way too much flattery, but thank you very much. I really appreciate it. I'm flattered, honored. When I look at the list of names that I'm joining, it really kind of humbles me to a degree that I can't really even express. From my hometown of Memphis, I guess we'd like to say I'm in some really high cotton.
Chris, when did you get started in the futures industry?
I got started in the summer of 1977.
Chris, let's do a quick rapid fire segment here on the timeline of your career.
Okay.
What year did you start backing pit traders?
1990, 1991.
And then not too soon after, you started backing point and click traders?
Correct. That was at night.
When did you start getting into HFT and algorithmic trading?
That was in the early 2000s, probably about 2004.
And what about crypto trading?
2 years ago.
There's a theme here, Chris, and I did that because you're always ahead of the curve. It seems to me, I've followed your career, you are always ahead of the curve, never scared to take chances, and always doing things before everybody else, or at least at the start of when things are changing in our industry. What's your secret to success?
Through the years, it's really pretty simple. I like a lot of people in the industry, I really just try to watch and observe what's going on. An old timer one time at the Board of Trade said, "Kid, if you see a line, get in it." And so when you see activity and you see something starting to take hold and starting to get traction, you just got to observe it. And so there's a famous Yogi Berra saying, I'm a big fan of the great philosopher Yogi Berra, and he said you can observe a lot just by watching.
You said this to me in the past, you're a big fan of Yogi Berra. Why?
I think his statements are so simple in their elegance, right? That baseball is 70% physical and 40% mental. That means you got to give 110%, right? And so he was a great human being. Very few people know that Yogi Berra was on the beach at D-Day. And he said it shaped his life to try to put things in perspective. So his whole baseball career, he tried to keep things simple. And so I'm a believer in his philosophy.
We went through your timeline in that rapid fire, and currently you are Hehmeyer Trading and Investments. Talk to us about what you guys are up to these days.
Hehmeyer Trading Investments does three basic things. Prop trading, and in our model, we let the traders keep the intellectual property. And a lot of the big companies in the proprietary trading game are not built that way, and they're tremendous, and it's hard to compete with them. But we do have a lot of talented guys who come out of some of those shops who are able to write their own programs, and they don't have the infrastructure that is needed these days to be part of the exchanges. Seats, regulatory, technology, co-location support, accounting support, all the things that go along with having to be involved in a high frequency type game. A lot of those people don't have the support, and so we basically partner with people and work out some percentage of the profit. So our proprietary trading model, we have 23 profit centers, is basically partnering with traders on the proprietary side. We have a commodity trading advisor and CPO and introducing broker entity that's registered with the NFA. And so we actually have customers. Many of those are former floor traders, but members who are professionals who trade full-time for a living. We give them support by helping them with seats and their ISVs and various things that come up for traders that some of the other firms don't do. So we help them with services on the customer side. We also have a execution and allocation business. But in the CTA, we manage other people's money. We allocate our own money and have investors, and we look for particularly niche commodity trading advisors, niche managers who are not the trend followers. The trend followers are terrific at that game. We look for niche managers and we try and build portfolios of managers in our CTAs that lowers the volatility, raises the return. We also have a little fund that's a crypto fund under our pool operator. And then lastly, in addition to the prop trading and the registered entity, we make markets in crypto.
You've been through a lot of different environments. And like I said, you've always adapted and always have a willingness to change to what is working now. How do you compare trading in this current environment versus past environments?
Well, the machines have incrementally over time become incredibly powerful and, of course, very fast. Take your breath away on some of the numbers that I hear of how fast that decisions can be made. And so the market has become, in some ways, mature in the sense that these market-making machines are very, very good at what they do. And so the traders that trade day to day need to keep that in mind. But it doesn't mean that because machines are great now chess players that chess playing is going to go away. There are definitely humans that are good at this game and play it pretty well. But it's different in the sense that the machines dominate a lot of the activity. And so anybody that's going to approach this as a human being and not write very extensive algorithms needs to keep it in mind that the machines dominate. And so that's a little bit different. Crypto is wide open.
I mentioned how you've seen so many different markets over the years, but you've also seen a lot of different traders. How different or similar are traders now versus when you first started in the industry?
Well, for the most part, the game was inefficient when those floors were all active and there were thousands of people on those trading floors. And so the inefficiencies of it made it available to lots of people. And so lots of people could come and bring different approaches to those floors and participate. The number of people has shrunk because the machines have gotten so sophisticated at this. And so there's the algorithmic people, the people that are very good at writing algorithms, and most of the industry and most of the activity is run and dominated by the technologies and the people writing algorithms that do all kinds of different things with factor evaluations. The traders who today make money consistently have to be very disciplined and very good at their risk, money management, and approach. And of course, they're basically batting for average for the people that are trading day to day to day. So that group is smaller and more disciplined.
Chris, that was awesome. Thank you.
Thank you,
We're not
Anthony.
done yet, though, my friend.
All righty.
Next up, everybody, Chris and I are going to sit down with one of his traders and go over his trading process. Stay tuned.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit learnfuturestoday.com to see what adding futures can do for you.
Welcome back, everybody. Chris Hehmeyer on the desk now, and also joining us, Greg Sroden. Greg, thank you for joining us. Chris as well. Chris, I want to continue our conversation that we had over on the two chairs. We talked about how you've had a lot of experience with different markets over the years, and also hiring different traders to trade these markets over the years. What's your process for hiring a trader?
It depends on the discipline, and that's really important to keep in mind. I have seen a lot of different sizes and shapes of all different kinds. The highly algorithmic, low latency people run algorithms, and the techniques are different. What software language it's written in, FPGA, all of the things that go into microstructure algorithmic trading. An approach that is taking positions in the sense of a commodity trading advisor, CTA, making trades for investors, most of that centers around risk management and having a framework for entering trades and exiting trades, depending on what the risk is like. And so I really look for people that have very good framework for managing the risk.
So it's not just about X's and O's for you.
It's not just about X's and O's. It's in the subtleties of that. And some people can try to do that and not be good at it, not talented at it. Some people spend their lives doing it, and they're very good at it.
Well, we've got one of your traders sitting right next to you, Greg
He's
Sroden.
one of the best.
Greg, what type of a trader are you?
I trade the E-mini S&P, but I day trade it.
You day trade the E-mini S&P. Why did you choose the E-mini S&P?
Well, I've always had a passion for the stock market, and the E-mini S&P provides the most liquidity.
So an E-mini S&P trader, we're like brothers from a different mother in that respect. Are you primarily technical, or do you use fundamentals?
Technical. I look at the fundamentals, but I'm almost 100% technical.
Well, that's good because we've got some charts to look at here, Greg. So why don't you walk us through a little bit, talk to us about your trading process.
Sure. Everything's about context, and you can't get any broader than a monthly chart. And this chart goes back about 20 years, and you can see a couple of things. You can see 4 significant all-time highs and peaks highlighted in the purple. And you can also, on the bottom, see an indicator called the Relative Strength Index that shows divergence. And what I mean by divergence is that the RSI is simply a momentum indicator, and that usually at market tops peaks before price. And you can see that in this case, it does for each of these 4 market peaks. Now, if we zoom in on each of these 4 peaks, let's look at the first peak, which was the dot-com peak in 2000, 2001. What you'll notice, and again, this is a monthly chart, you'll see the negative divergence where the indicator is trending down while the price is still in a trading range. What you'll notice is this trading range lasts about 14 months. The breakout is in the 14th month. It's the 14th month in each of these cases. So we go sideways and consolidate within about a 10% range for 13 months. And you'll notice that the top of the box, right around month 11, the market is near the top of the box. So just keep that in mind. Let's move to the next peak. And this is the peak in 07, 08, which we all remember. Again, you'll see a trading range. You'll see the negative divergence. You'll see a trading range that lasts 13 months. And then the breakdown occurs in month 14. And you'll also notice around month 11, the market is at the top of the box. Let's move on to the next peak. And that peak is the one that happened right around August, September 2015. You'll see the negative divergence again with the indicator. 13 months in a trading range, about 10%, and then a breakdown in month 14, once again. This one's a little different, though, because immediately after the breakdown, on the next month, we closed back within the box. So this, obviously, if you were trading this, you would want to exit once you saw that the pattern break down with a close back in the box right after we broke below the box. Now let's go to the most recent market top. You can see the negative divergence again on the bottom with the RSI. And you can see with the purple shaded box that the market entered a trading range of about 10% between November of 2017 and November of 2018, just like in the other examples. And again, the market traded near the top of the box in month 11. And then, just like in all the other examples, the market broke down in December of 2018, which is the 14th month.
Pretty interesting stuff, Chris. What'd you think about that?
We have about $125 million in our capital management company, and Greg manages a big piece of that for good reason. Wait until he breaks down a trade for you.
And we are going to do that because, as we all know, you can have the greatest setups, the greatest charts in the world, but it's all about execution. But before we do that in the next segment, I want to ask you a couple of questions. First off, You chose monthly charts for this. Is monthly charts where you typically begin your homework?
Yes, even as a day trader, you want context. And starting with, I always start with the monthly chart and work my way down.
You also had RSI up there. Is that the standard setting? And also, why did you choose to use RSI?
14 is a default on RSI. It's an overbought, oversold indicator, and you could also use something like MACD or stochastic. The key is you want to see that negative divergence with the indicator.
14 months. We saw that a lot on the charts that you just went through. Did you build a program to identify that pattern, or was that just from you, years of experience looking at the charts?
Well, I studied the peak in 2000. I studied the peak in 2007. I know that major tops are processes, and that these tops tend to be rounded. And by studying each of these prior tops, I noticed a pattern. And in this case, the pattern was identical to the 2018 pattern. And it just comes from hours and hours of studying charts, pattern recognition.
Great info, great insight, Greg. I look forward to seeing that trade setup in the next segment. So we're going to get there in a few moments. Chris, if you could just hang tight for me, Greg. And next up, everybody, we're going to add Julian Mula from Redsky Software Alerts to see how alerts look alongside Greg's strategy. So stay tuned.
Why trade futures with TradeStation? You can trade over 80 products from home, work, or on the go with a powerful, easy-to-use interface and prices that let you focus on padding your wallet, not emptying it. Upgrade your trade at TradeStation.com. Why trade with TradeStation? It's innovative, easy to use, and totally freaking sweet. With powerful tools to track and execute your trades and low per-trade commissions on stocks, futures, and options. Upgrade your trade at TradeStation.com.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit learnfuturestoday.com to see what adding futures can do for you.
Welcome back, everybody. I'm joined by Chris Hehmeyer, Greg Sroden, and Julian Mula, like the money. And Greg, in the last segment, we talked about execute is everything. You showed us your process, showing us those monthly charts. Walk us through that trade setup from those charts.
Sure. Now we have the setup. Look again at the 11th bar in this trading range. You see the market at the top of the box. We don't want to short, though, at the top of the box. We want to wait for some sort of confirmation. We get that confirmation with a break of that 11th bar low, and you can see it represented there by the short sign. So now we get into our short position. We've got the trade on. The first thing we want to do is figure out our risk. We don't want any part of this trade if the market goes back up and breaks the all-time high. So we're going to put our stop right at the all-time high. Now, the way I trade, even on a day trading basis, is I cover a third of my position at a predetermined spot, usually when the profit equals about the initial risk of the trade. So I'm out of 1/3 of my position. I realize that some people may say that mathematically it's better to stay in your entire position for the duration of the trade until it reaches the profit target. I then would cover another third of the trade, the second third, around the bottom of the box or a test of the February low. And then the last third I would let ride to see how low we can go. If it's like the other bear markets, it could go substantially lower. In this case, however, in January, you can see that the market closed back within the box. That did not happen in the previous two bear markets in 2000 and 2007. So at this point, I would cover the trade, the last third of the trade, because the pattern broke down.
First of all, I love that you used the 3-lot because in my career, I always do a third, and a third. So I can really relate to that. Chris, what'd you think about that trade?
The disciplines of taking positions, particularly if clients are involved, is about the risk management framework. And this is about the discipline, setting up the trade, and managing the money with a discipline and a framework that works for the trader and works, in this case, works well for Greg.
Yeah, absolutely, Chris, risk management. But let's go back to you first, Greg. Walk us through this additional trade you want to show us.
Now this is a daily chart, and it just shows, I want you to focus in on the purple rectangle that shows a trading range and a resistance area at 28.15. You can see the V bottom on Christmas Eve, and we've gone straight up to that resistance area just in the last week or two at 28.15. So let's see if we can come up with even on a shorter time frame, a trade here. Here again, you can see on an hourly chart, we've just come up to that resistance level just in the last month or so. And again, we come up to this resistance level, and now again, we don't want to sell it right at the top of the resistance. We want to wait for some sort of confirmation. So here's an hourly chart, and we want to sell it just like we did with the monthly example. We want to sell 3 contracts once we break a monthly or an hourly low. So we sell 3 in this case at 28.09, and we're now in the position. Again, where's the risk? The risk is right up near those highs. We give it a little bit of room, maybe a stop at 28.20. So now we have 11 points, roughly 11 points of risk. And again, we cover the first third of the trade at roughly the same distance as once we have a profit that's equal to the risk, initial risk of the trade. So we're out of one of these contracts at around 2,800. And then you can see this is all from Monday. We cover the other another third of the trade around 27.79. Why do we cover there? It's testing at that point. It's testing the previous week's low, and now we're out of 2/3 of the trade. And then finally, we're going to wait and see if on that last third how much we can get out of this trade. We still have our stop in. But we might cover the last third at the bottom of the box, which would be around 26.50. This is a live trade. We don't know what's going to happen. But we know that the market's been in a very tight range for about 12 trading days, and we don't want to be long if we go back up to 28.15 or 28.20 anymore. But if we do break below the bottom of this tight 12-day trading range, we want to have something on because it may really run.
I got you. I love it. And also, just to confirm, this is another trade example that started with a longer-term context, right?
Yes.
And then you fit it into more of your day trading time frame with the hourly, right?
Yes.
Now, you mentioned confirmation. Do you always have to have a confirmation for your trade?
Yes. I've found that if you're just trying to randomly pick a high or a low, sometimes that works. But once you get the momentum turned, now especially at that point, you know where you're wrong because you have a previous high or a previous low in terms of where to place your stop.
And currently, right now, you're still sitting short a portion of this position in the E-mini S&P.
A third of that original trade.
So a great confirmation that I like, Redsky software alerts. Julian, what alerts are you seeing today in the S&P or the other indices?
It's interesting. We just got a half an hour ago an alert about mini Dow trading below the 20-day moving average. And usually this is a very bearish signal. And it's so interesting that Greg is also short indices, and these two trades are aligned with one another. The forecast for this mini Dow trading below the 20-day moving average is to expect the price going even lower over the next 5 hours. But more interestingly, if we see the daily predictions, there is a stronger bias on the downside. So it's an alert that completely confirms what Greg is doing.
I love that, Julian, and that's really why I've started to look at those Redsky alerts a lot more often these days because of, like you said, confirmation. I use that in my trading as well. Do you look at other indices such as the Dow, and when you see an alert like this closing below the 20-day moving average, does that give you more confirmation in your trade?
Absolutely.
So if you saw this type of an alert, what would it potentially do for you in your trading? Do you trail stops? Do you say, hey, you know what, this might really get our target? Are you adjusting anything if you get a confirmation like this?
I would stick with the trade, but this is something that would add confidence and give me a better shot of sticking with the trade all the way to the end.
Yeah, I mean, as we all know, confidence is everything. If you believe in it, if you things are coming to you that are supporting your idea, it does give you confidence. Chris, what do you think about these alerts adding confirmation to trade setups?
Again, so much of that is about the risk management and how much risk you're willing to take in a trade gives you confidence to stay with it. And then when you're going to exit the trade, so all of that's about the risk management to me.
That was awesome, guys. Next up, everybody, we have a great guest for you, Dr. Jessica Hehmeyer. That's right, Chris's wife, and she's going to talk to us about how you can stay on your A game while you're trading. So stay tuned. Good work, guys.
Why trade futures with TradeStation? You can trade over 80 products from home, work, or on the go with a powerful, easy-to-use interface and prices that let you focus on padding your wallet, not emptying it. Upgrade your trade at TradeStation.com. Why trade with TradeStation? It's innovative, easy to use, and totally freaking sweet. With powerful tools to track and execute your trades and low per trade commissions on stocks, futures, and options. Upgrade your trade at TradeStation.com.
Welcome back, everybody. I'm joined by Greg, Chris, and the lovely Dr. Jessica Hehmeyer. Doc, how do you keep him on his A game all these years? I told you he's a legend at the beginning of the show. I love this guy. How do you keep him on his A game?
So with Chris, one of the things we talk about a lot in our household is making sure you get enough protein with every meal, making sure that you're getting something in your body roughly every 4 hours, and doing your best to keep things that ultimately pull down your blood sugar out. So things that are simple carbohydrates, sugars, stuff like that. And with that, making sure that you have numbers to monitor your progress, right? You guys are all numbers guys, right?
Absolutely.
People in the trading industry, right? And Chris, what would you have to say about the numbers that we've accumulated over the last few years, the data you've gotten?
I've loved seeing the information that I get from some of the tests, and I get to be a guinea pig for a lot of tests. And the data is fascinating to see what my biome is like, my blood, various things that in my body that are different than anybody else's, right? We're all different. And understanding that data of what's going on in our body is crucial to trying to make sure you maintain a high level of performance.
So, Doc, once again, like trading, it's personal, right?
Yes.
To each one of us. I think the mistake that I know that I made is that I was eating things that were healthy, but I didn't feel better. So my gauge for what I was eating was how I felt.
Yes.
And it took me a long time to figure out what worked for me.
Yeah, and Anthony, that's a great point too, because you want to be both monitoring how you feel and then the data that goes with it. Those are the two things that we're constantly focusing on as outcomes, right? How do you feel? And do the numbers reflect your optimal health? And are you getting the information necessary in order to feel your best?
Talk to me about the numbers. What data are you looking at specifically?
That's a really great question. So when I think about high energy and I think about being as sharp as you can mentally, first of all, I think about your B vitamins. Where are your B vitamins at? And that's just a simple blood test, right? Making sure that your B vitamins are optimal for you. And by the way, when you're in a high stress situation, which most people in the trading industry are, you're going to use up those B vitamins a lot faster to produce cortisol, our primary stress hormone. So knowing that number, and then if it is out of the optimal range for you, making sure you're doing what you can to both eat foods that are high in B vitamins, as well as supplement if that's something that's necessary for your body and where your needs are.
I always question whether it should be food or supplements.
Yeah, so good question. Food first, for sure. There is no supplement in the world that is going to make up for paying no attention to nutrition. And supplements are just that, right? They can supplement your gaps. They can supplement when your body is under high stress for long periods of time. You may need a little more help with that. Or if for a variety of reasons you've not yet focused on your health and you get those numbers and you see, hypothetically speaking, let's say, we can actually measure inflammation. So if inflammation's high, it is going to interfere with your mental focus. So you see that, you want to affect it. Certainly starting to make some changes in your nutrition is going to be important, but there are some really great supplements that can be helpful to get you over that hump and get your physiology moving in the right direction.
Yeah, and for me, I don't like diets. I've never been
Yes.
someone to do any sort of diets. I believe in lifestyle changes.
Yes, and I know you've made some really great changes in the last year yourself.
Yeah.
And so, for you figured out, this is really important to me.
It's super important to me, and Doc, it was an honor having you on the show today. Thank you so much. Chris, thank you. Greg, everybody, be sure to catch all episodes on futurestvshow.com, and don't forget to follow me on Twitter and Instagram. See you next time. Remember the old days, Chris, with the cards?
I do.
Still doing it, baby. Bringing it back.